In 1784, an American ship named the Empress of China docked in Canton. It carried silver, ginseng, and hope. It returned with tea and a new addiction. The United States was a young republic with empty coffers and boundless ambition. Europe had colonies. China had markets. America had neither. But it had one thing the British were already using to reshape Asia: trade without morals, disguised as commerce. Behind the polite language of merchant ledgers was a single word that financed empires: opium. It was not grown in America, but American money and ships soon carried it across the Pacific. Not openly, never openly. The cargo was hidden in rice, tea, and cotton. Profit moved in silence. Morality stayed ashore. Why China? Because China was the world's largest economy, and it wanted nothing from the West. Silver flowed in, never out, and that terrified London and Philadelphia alike. To reverse the flow, they needed a commodity China couldn't refuse and couldn't control. Opium became that commodity. It wasn't just a drug, it was a financial technology. It converted moral risk into monetary gain. Each chest of opium was a bond, backed by addiction and despair. By 1820, American traders like the Perkins, Astor, and Russell families had built fortunes on it. Their names would later fund banks, universities, and politics. The money looked clean, but its source was smoked in the dens of Canton. Some historians call it a necessary evil of globalization. Others call it the moment when American capitalism learned to ignore consequences. The truth lies somewhere between supply and denial. And now imagine this. The first generation of American wealth did not come from industry, but from addiction. The opium empire was not an accident. It was a business model. If this opened another side of history for you, comment where you're watching from. By the late 18th century, the world was already divided not by geography, but by flows of value. Silver was the bloodstream of global trade, and China was its heart. The Qing Empire didn't crave foreign goods. It demanded silver, the only currency it trusted. For Europe and the young United States, this was a silent crisis. Every ship that entered Canton left poorer in metal, richer only in cargo that could not buy its way back. Tea, silk, porcelain, China's exports filled European salons and American parlors, but behind the luxury was a drain. The British Treasury saw its silver disappearing eastward. American merchants saw an opportunity in the imbalance and a loophole in morality. To understand the opium trade, one must understand the architecture of dependence. It began with 3 triangles of exchange, each connecting greed to geography. From Bengal, the British East India Company produced opium under military protection. From Boston to New York, American ships carried silver, furs, and later cotton. And from Canton, tea and silk sailed back, filling the warehouses of London and Philadelphia. But something shifted after 1800. Napoleonic Wars had disrupted European trade. China, still powerful, remained closed to most foreigners except at Canton. Yet the demand for Chinese goods in the West only grew. So did the desperation to find something, anything, that China would buy. Opium was not new. It had been used medicinally in Asia for centuries. What changed was the scale. When the British East India Company discovered that addiction could function as policy, it industrialized the poison. Plantations in Bengal turned into state-run narcotics operations. The profit margins were astronomical, far higher than tea or textiles. And soon American private traders wanted in. They couldn't sell opium directly under their flag. It was illegal. So they financed the British operations, provided ships, and handled neutral cargo. Through clever accounting, opium became invisible. Bills of exchange disguised its path. And the money returned to America not as contraband profit, but as capital for legitimate trade. This was how the early American elite learned to separate ethics from economics. Merchants who built churches on Sunday were underwriting narcotics on Monday. Families like the Russells of Boston, who would later help found universities, began their fortunes in the opium triangle. The Astors, better known for New York real estate, made their first millions the same way. Some historians call this the birth of the American offshore mentality, not colonial in land, but colonial in finance. The ocean became a network of plausible deniability. You could be moral at home and merciless abroad. China's emperor saw the threat too late. By the 1820s, addiction had spread through the coast like fire through dry paper. Opium consumption soared among bureaucrats, soldiers, and peasants alike. Silver began to flow out instead of in. The empire's monetary system started to collapse from within. And across the Pacific, in Boston drawing rooms and New York counting houses, fortunes multiplied. Opium money built clipper ships, funded banks, and later helped industrialize the American Northeast. It didn't look like crime, it looked like progress. This was not just trade, it was a quiet revolution in how profit was justified. The world had discovered a new formula. Moral distance equals economic efficiency. The coincidence was too precise to be accidental. As China weakened under addiction, the Western financial system found its strength. And in that imbalance, modern global capitalism began to take shape. If this gave you a new lens on the roots of global finance, share where you're watching from. By the 1830s, the numbers no longer made sense. For every ton of tea that left China, twice as much opium entered it. Silver, once the pride of the empire's treasury, was vanishing into foreign vaults. What had begun as trade had turned into extraction, silent, systematic, unstoppable. The Qing bureaucracy realized too late that money was bleeding out through invisible channels. Local officials tried to ban the drug. Corruption made that impossible. Customs officers were bribed, soldiers were addicted, and smugglers moved freely under the protection of foreign privileges. It was not merely a moral crisis, it was monetary. The empire's fiscal base depended on silver. When that silver left, taxes lost meaning, wages lost value, and the empire's legitimacy began to erode from the inside. To understand the depth of the problem, think in modern terms. Silver was China's reserve currency. Opium was an external algorithm designed to drain it. Every chest of the drug was a tool of balance of payments manipulation, a primitive, lethal form of financial engineering. Britain and America had found a way to correct their trade deficits not with productivity, but with addiction. By 1838, estimates suggest that up to 40,000 chests of opium were smuggled into China every year. Each chest contained around 140 pounds of processed narcotic. Each pound represented not only human despair, but silver taken out of circulation. China was, in effect, paying for its own decay. The British East India Company pretended to maintain distance from the trade, claiming it did not officially sanction private sales. But it controlled production, set prices, and auctioned the drug through Calcutta. American traders operating through intermediaries and neutral ports handled distribution. The Russell and Company of Boston became the largest American opium firm, working alongside British partners Jardine Matheson and Dent & Co. In modern language, it was a multinational cartel with national flags as camouflage. The Qing state's reaction was bureaucratic, not systemic. In 1839, the emperor sent Commissioner Lin Zexu to Canton with absolute authority to stop the trade. Lin was honest, determined, and unaware that he was fighting not merchants, but an early prototype of global finance. He seized over 20,000 chests of opium and ordered them destroyed. The image of British traders watching their profits dissolve into the sea became symbolic, but the real power was elsewhere. The empire had just attacked the liquidity of the Western world. Britain responded not with diplomacy, but with gunboats. The First Opium War began. The first war in history fought to defend a narcotics supply chain. Behind the rhetoric of free trade was a simple equation. If the East stopped buying poison, the West would lose its profits and its balance of payments. This was the turning point. The system revealed its true logic. Trade was no longer about exchange, but about control. Addiction had become a financial instrument. Empires fought not for land, but for cash flow. When British cannons reached the Pearl River Delta, it wasn't just a military act. It was the visible enforcement of invisible contracts. The Treaty of Nanking in 1842 forced China to open ports, pay reparations, and cede Hong Kong. The legal justification was commerce. The real motive was liquidity. And through it all, American merchants stayed in the background. They supplied ships, insurance, and financing, but avoided the headlines. While Britain bore the moral blame, America collected silent dividends. Boston's opium money was reinvested in textile mills, railroads, and banks. The foundations of American industry were laid, in part, on China's collapse. What does that mean? It means that globalization began not as cooperation, but as exploitation through asymmetry. The same mechanisms that moved opium later moved oil, debt, and data. They differ only in legality. The First Opium War ended with British victory and Chinese humiliation, but its deeper consequence was invisible. It normalized the idea that economic power justified moral surrender. A precedent was set. If a market resists, it can be forced open. If a population suffers, it's collateral damage for progress. And that is where the American model learned its first global lesson, that fortune favors those who can separate ethics from economics. After the smoke cleared and treaties were signed, the system began to function like a machine. Every part had a purpose: production, transport, laundering, reinvestment. Opium was no longer just a commodity. It was a financial architecture. The first gear turned in India. The British East India Company held a monopoly on cultivation in Bengal. Local farmers were forced to grow poppies instead of food, receiving credit in advance, debt that tied them to the company. The harvested sap became opium, processed in government factories under armed guard. Every chest that left Calcutta was logged, taxed, and sold at auction to private country traders. Most of those traders were British, but a growing number were American. The second gear spun across the sea. American ships, faster, lighter, more discreet, carried opium through intermediaries. They used neutral flags to avoid British taxes and Chinese scrutiny. Cargoes were declared as cotton or manufactured goods. At sea, the truth was rearranged by paperwork. Bills of exchange, letters of credit, and coded invoices turned narcotics into finance. The third gear was in Canton. Chinese smugglers and corrupt officials handled distribution. Silver collected from addicts and dealers flowed back to the foreign factories, warehouses run by Western merchants. There, opium money was used to buy tea, silk, and porcelain, commodities clean enough to re-enter the Atlantic trade. It was a perfect cycle. Poison out, silver in, legitimacy exported. The profit margins were staggering. A single chest of opium cost around $50 to produce and could fetch more than $2,000 in China. For every dollar of risk, the return was 40-fold. It was, in modern language, a leveraged asset, and like any leveraged system, it was bound to destabilize the weaker side. To hide its origins, opium revenue was laundered through London and New York banks. Families like the Russells, Delanos, and Astors reinvested in railroads, textile mills, and banking institutions. These became pillars of American capitalism. The trade taught merchants that distance was protection. What happened in Canton stayed in the ledgers. And so the opium economy became a prototype of globalization. Each participant could claim innocence by pointing elsewhere. The British said they sold only at auction. The Americans said they only transported. The Chinese dealers said they merely distributed. And the financiers said they just moved money. No one took responsibility, yet everyone profited. Some historians compare the system to a shadow version of Wall Street. There were futures, promises of crops, derivatives, bills of exchange, and insurance to cover losses at sea. It was a market built not on productivity, but on dependency, a network that monetized human weakness. What made it so efficient was not technology, but indifference. When profit becomes abstract, morality becomes optional. The opium network proved that economics could operate without ethics and still be celebrated as progress. The Qing Empire tried to adapt. It imposed stricter bans, sent more inspectors, and even executed smugglers. But none of that mattered. The problem wasn't law, it was leverage. Foreign merchants had ships, guns, and capital. China had markets, but no control. The imbalance was systemic, and when silver ran out, the empire's financial lungs collapsed. Inflation rose, salaries fell, local revolts began to flicker. The social fabric frayed under the combined pressure of poverty and addiction. Meanwhile, in Western ports, the profits financed expansion, banks, and industry. What looked like trade was actually a transfer of power from east to west through finance disguised as commerce. The opium mechanism didn't just destroy China's economy, it created the blueprint for modern financial imperialism. Because once the world saw that addiction could be monetized, every future system, from debt to data, would follow the same design. If this helped you see how empires function like machines, tell me where you're watching from. By the mid-19th century, the numbers told a story of collapse. China, once the richest empire on earth, was bleeding silver at a pace it couldn't sustain. The tael, the silver standard unit, lost nearly half its value in a generation. Peasants couldn't pay taxes, soldiers weren't paid at all, and corruption filled the gap. Addiction was no longer a hidden shame. It was a national condition. In 1840, perhaps 2 million Chinese smoked opium. By 1880, estimates reached 10 times that. The drug, once confined to ports and elites, had reached villages and garrisons. A nation built on Confucian discipline now functioned on chemical escape. This wasn't just a medical crisis. It was a transfer of control from an imperial bureaucracy to foreign finance. The Second Opium War in the 1850s finished what the first began. New treaties expanded Western privileges. More ports open, tariffs fixed, missionaries protected, cities ceded. Britain, France, and the United States gained most favored nation status, a phrase that sounded diplomatic but meant economic disarmament. China lost its right to regulate trade on its own territory. Opium became legal. Addiction became policy. And while the empire crumbled, Western capitals prospered. London banks absorbed the silver that once filled Chinese treasuries. American families who had financed the trade reinvested their profits into factories, railroads, and real estate. Boston's mercantile wealth flowed into institutions like Yale, Harvard, and the Bank of New York. The moral stain of opium was washed in dividends and philanthropy. Every system leaves its architecture behind. The opium network's architecture became the global trade system. Foreign concessions in Chinese ports acted as early free trade zones, where local law was suspended in favor of profit. It was the prototype for modern special economic areas, spaces where capital moved freely and accountability stopped at the gate. Inside China, the cost was measured in both metal and mines. The silver drain destabilized the currency. Inflation tore apart rural economies. Provincial armies, unpaid and desperate, turned against each other. From these fractures emerged uprisings, the Taiping Rebellion, the largest civil war of the 19th century, born out of despair and chaos. 20 million died. It wasn't only opium that killed them. It was the debt that opium created. The empire's collapse became a mirror for the modern world. Every addiction, whether to drugs, credit, or consumption, carries the same logic. Dependency becomes leverage. The West learned to weaponize imbalance. China learned what it meant to lose sovereignty without losing its flag. And in America, the consequences were invisible but lasting. The wealth built on Asian misery fueled industrial acceleration. Opium profits helped bankroll the cotton trade, the textile mills, and the banking houses that would later underwrite Wall Street. Even as the nation debated morality in church pews, its economy evolved around moral absence. The irony is almost mathematical. The same century that gave birth to liberal democracy also perfected global exploitation. The rhetoric of freedom financed by forced addiction. The world was entering modernity, but its foundation was ancient. Profit without conscience. When the British and Americans left Canton after the wars, they carried more than tea and silver. They carried a blueprint, a demonstration that financial systems could conquer without armies. Capitalism didn't need colonies, it only needed contracts. And from that realization came the next stage: banks replacing gunboats, credit replacing opium, and debt replacing silver. The tools changed, the principle did not. Some called it progress, others called it destiny. But in reality, it was the same empire, only more efficient, more abstract, more invisible. The price of progress was always someone else's collapse. If this part of the story connected the past to its cost, tell me where you're watching from. The century turned, the ships changed, but the current stayed the same. The opium chest became banknotes, then bonds, then data. The product no longer numbed the body, it numbed the mind. And the empire that once sold narcotics found a new formula: sell dreams instead. What was once called addiction became consumption. What was once called silver outflow became capital flight. The mechanism, leveraged through dependency, never disappeared. It evolved. After the Second Opium War, the Western powers turned from physical trade to financial engineering. The same logic that monetized human craving began to monetize entire nations. In the 20th century, the opium fields of Bengal were replaced by the debt fields of the developing world. Loans became the new narcotic. Each line of credit promised growth, yet extracted control. And the institutions that managed this flow, banks, funds, agencies, became the modern East India companies. Imagine the parallel. In 1839, China's silver drained to London. In 2025, its capital flows to offshore funds in the same cities. Different currency, same direction. The addiction today isn't to opium, it's to growth itself. Governments, corporations, and consumers are hooked on expansion that never ends. GDP replaces the poppy crop. Quantitative easing replaces the auction at Calcutta. The trade is still one-sided. The few issue promises, the many pay interest. What does that mean in practical terms? It means that financial dependency has replaced colonial dependency. A developing economy that borrows in dollars lives under the same pressure as Qing China did under silver. The medium changes, the leverage remains. Debt is an invisible empire. It doesn't need ports or treaties, it needs contracts. And then there's the other kind of opium, digital. The 19th century had smoking dens, the 21st has screens. Both create escape, both feed on repetition, both monetize attention. Social networks, streaming platforms, games, they don't sell content, they sell time. Each notification is a small dose. Each scroll is a transaction. Addiction remains the most reliable business model in history. When China was addicted to opium, it exported silver. Today, the world is addicted to digital dopamine, and it exports data. The pipelines are faster, but the structure is identical. Producers control supply, users create demand. Information replaces narcotics, and attention becomes currency. There's a cruel symmetry in that. The nation once enslaved by addiction is now the one mastering control of the global data economy. China, the old victim, has learned the logic of the empire that once dismantled it. It builds platforms, not poppies. It regulates attention, not opium. It invests not in silver, but in digital infrastructure. History didn't end. It reversed polarity. Meanwhile, the West still exports its abstractions: debt, ideology, entertainment. It still builds markets around dependency, only now it calls it innovation. The pattern is the same: create need, sell relief, repeat. The global economy has simply replaced chemical craving with psychological craving. Consider this. The 19th century opium wars were fought over trade access. Today's wars, over data, semiconductors, and intellectual property, follow the same script. Economic sovereignty is still a battlefield, only the weapons are invisible. And yet the irony persists. The nations that once called themselves civilizers are now dependent on the manufacturing power of the country they once dismantled. China's factories supply the world. Its markets sustain global demand. The empire that began with opium now runs on consumption, an addiction at planetary scale. Every smartphone, every app, every streaming hour is part of that circuit. The moral equation remains unsolved. Some historians describe this as the completion of a 200-year cycle. We've digitized the opium war, turned its weapons into algorithms and interfaces. We no longer invade countries, we invade attention spans. And the new tea, silk, and porcelain are data, influence, and liquidity. The structure of exploitation has become elegant. No armies, no smoke, no shame. Just contracts, code, and compliance. The 19th century proved that profit could outlive morality. The 21st proves it can outsmart it. And yet a strange continuity links the two eras. Both began with a question. What happens when desire becomes a system? In both, the answer was the same. Control. Because whether it's opium in a pipe or credit on a screen, dependency always flows upward. It enriches the issuer and drains the user. And every empire, old or new, learns to call that equilibrium. History didn't change, only the packaging did. 2 centuries later, the smoke is cleared, but the structure remains. Trade, debt, data, each a refined descendant of the first opium chest that left Calcutta. The product changed form, yet its essence stayed. Dependency is design. Profit is justification. What began with ships in Canton became spreadsheets in New York, then algorithms in Silicon Valley. The mechanism no longer needs gunboats. It needs users. Addiction has become participation. Consent is the new currency. And the most powerful nations no longer conquer territory. They conquer attention. The empires of the 19th century extracted silver. The empires of the 21st extract time. Both measure wealth by what others lose. Some call it progress. Others call it inevitability. But history rarely repeats. It migrates. It moves where morality is weakest and profit strongest. The opium empire didn't vanish. It evolved into abstraction. Its ports became servers. Its ships became networks. Its traders became economists, coders, and central bankers. And somewhere, beneath the charts and headlines, the same quiet question remains. What is the cost of our comfort? And who pays it? Because in the end, every fortune has a source, and some beginnings never end.